Hello and welcome on this session on and budgetary control. Well, budgeting has come to be accepted as an efficient method of short-term planning and control. It is employed simultaneously in large business houses as well as the small businesses are using it, at least in some informal way. So the technique of budgeting is an important application of management accounting. Let's look at what exactly a budget is. As defined by the Chartered Institute of Management Accountants, a budget is a financial or quantitative statement prepared and approved prior to define period of time of the policy to be pursued during that period for the purpose of attaining any given objective. Similarly, there is another definition from Brown and Howard of management accounting. A budget is a predetermined statement of managerial policy during the given period, which provides a standard for comparison with the results actually achieved. So whatever you put in the plan and then the actual results, they will be compared to this process of budget or budgeting. Based on these two definitions, we can easily get some clues and we can term them as budget fundamentals. So what a budget is, this is prepared for a definite period of time. So this is one of the features. If we go back and see whatever the highlighted features of a budget are, they have been summarized here. A budget is prepared for a definite period of time. A budget is a statement prepared prior to a defined period of time. And the budget is monetary or quantitative statement of policy. And last but not the least, the budget is a predetermined statement and its purpose is to attain a given objective. So these budget fundamentals, they are actually ingrained in the two definitions that have been presented on the previous slide. Now the question is, how budget is different from a forecast? Where a forecast is mainly concerned with an assessment of probable future events, budget is a planned result that an enterprise aims to attain. Forecasting precedes preparation of a budget as it is an important part of budgeting process. Well, it is also said that the budgetary process is more of a test for testing the forecasting skills than anything else. A budget is both a mechanism for profit planning and a technique for operating the cost control. So now how does this forecast differ from budget can be summarized here. So forecast, they are probable events, means forecasting is mainly concerned with anticipated or probable events. Forecast may cover for longer period of time or it can be extended to years. Forecasting is only a tentative estimate. Forecast results in planning and the function of forecast ends with the forecast of likely events. So it covers only a specific business function, and then forecast is not a cost control tool. So when compared to these features of forecast, when we see budget, where the forecast relates to the probable events, budget is related to planned events. Forecast is done for longer period of time, and it can be extended as long as many years, even decades or multiple decades. Whereas the budgets, they are planned or prepared for shorter period of times. Budget is a target fixed for a period. It's a target fixed for that particular period, and these periods, they usually happen to be small. Say we usually see the yearly budgets in a financial year, and then the planned event. So planned events for shorter periods with the pre-planned or fixed targets. So forecast results in a planning, whereas budget is the result of planning. Where forecasts cover a specific business function, the budget is prepared for the business as a whole. And the forecast is not used as a cost control technique in strict terms, whereas the budget is a typical cost planning and cost controlling tool. So the budgetary controls. What are the essentials of the budgetary controls? There are four essentials of budgetary control. Before we go into the essentials, budgetary control is the process of establishment of budgets relating to various activities and comparing the budgeted figures with the actual performance to look at the deviations, if any. So typically, as the ICMA England, they defined this budget as the establishment of the budgets relating to the responsibilities of executives, to the requirement of the policy, and continuous comparison of the actual results with the budgeted results, either to secure by individuals or individual actions, or the objectives of the policy, or to provide the basis for revision. So if we see the four limbs or the essentials, which again they come out from the definitions that we have just seen. The way we have seen the definition, let me repeat how the budgetary controls can be defined. So budgetary control is the process of establishment of budgets relating to various activities and comparing the budgeted figures with the actual performances to look for any deviation in the plan and execution. So here we are. What we are going to do is to see the deviation between the planned or the budgeted numbers and the actual number. First of all, we have to set the objectives, the establishment of objectives for each functions and section of the organization, because the organization is a whole of many parts. So for all functions and section of the organization, we are going to set the targets. And then comparison of the actual performance with the budget. As we are recording whatever we are doing or whatever being executed, and then there is a plan which was predetermined or prefixed in the form of budget, and we compare the two. So for all functions and sections of the organization, a comparison between the actual performance and the budget shall be made. Then the ascertainment of the causes for the deviations, so actual versus budgeted performances. Once we have done the comparison, then we see how the execution has actually gone, and we look for the root causes that have caused the deviations that have been recorded, the deviations between the actual numbers and the budgeted numbers. Once the causes have been identified, the corrective actions can be taken, and the corrective actions from different available alternatives to achieve the desired objectives is also categorized as a fundamental or budgetary control essentials. So four of them, again from the definitions that I described earlier, right from the establishment of the objectives and then the comparison of the two performances, and then noting down the causes of the variances which were resulted as when we made the comparison. And once you have the causes, then how can you, what are the corrective actions that should be taken in order to uh, see how the budgetary performance can be improved in future. So what could be the objectives of a budgetary control process? So there are three objectives any budgetary control process may aim at, and they are usual management functions like planning, coordination, and control. So when we are in the planning phase, a budget is actually a plan of action. Budgeting ensures a detailed plan of action for a business over a period of time. So once you have a plan and you not need to execute the plan, then we see the second objective, which is the coordination. So budgetary control coordinates the various activities of the entity or organization and secure cooperation of all concerned towards a common goal. So we have a plan here, then the plan needs to be put into practice or into an execution, and to ensure or realize the mandatory execution, we have to coordinate between different limbs or sections or functions of an organization. And last but not the least is the control. So control is necessary to ensure that plans and objectives are being achieved. Control follows planning and coordination. So we have plan here, we coordinate the plan for the sake of execution. Then once it's being executed, we have to keep a control of so that whatever was being planned is being executed. So no control performance is possible without predetermined standards. So the budgetary controls make control possible by continuous measurement against the predetermined targets. If there is any variation between the budgeted performance and the actual performance, the same is subject to analysis and the corrective actions that we have seen in the previous slide. So if we go back to the previous slide and we see these are the four essentials of a budgetary control process. So to achieve these four essentials, we have the objectives. And here we have the three objectives, which are planning, coordination, and control. So then we have some requisites for effective budgetary control. These are a few things that should be ensured if the management or an organization or an enterprise, they wish to have a successful or effective budgetary control mechanism in process. So clear-cut objectives and goals. This is very important because at the end of the day, through this budgeting control process, as we have seen previously, what we are going to realize is that our plans are implemented and controlled to achieve the essentials of the budgeting control, which were the predetermined goals. Then we have to put them into place, note down the actual performance and the budgetary performance, and then make a comparison between the two, look for the root cause, and then look for the corrective actions. So for all this process, a well-defined goal or objective is just like a sheet. If we do not have a well-defined goal and objective, all of this exercise may turn into a futile pursuit. So clear-cut objective and goal should be defined. Then the budget, let's see all of them and then we can discuss them one by one. So we have the budget control process. It should be put in place in such a way to realize the maximum benefits. So the ultimate objective of realizing the maximum benefit should always be kept uppermost. This is how the effectiveness or the efficiency of a budgetary control process will be measured. So the delegation of authority and responsibility, yes, this is very important. If we have to make this budgetary control process successful, there should be a proper delegation of authority and responsibility. Then budget committees, there should be some people in the enterprise or an organization who are responsible for determining the budget. And the budget, if we want to have a very effective control or the effective budgetary control process in place, the employee education is very, very important. All, especially, this is an inclusive approach where if the employees who are going to be the tools of the execution, if they are not involved and if they don't have the ownership, the control which we may have put in place, they may not work. Then the budget manual, and then last but not the least is the support of the top management. As the budget involves planning, then it has planning, monitoring, and control, or planning, coordination, and control to be very precise. So the support of the top management is necessary in order to get the full support and cooperation of the system of the budgetary process. So the budget should always be related to time specific period. If it's not time specific, we may miss out a lot of things out of it. Then there are a few more things. Adequate accounting system is essential to make the budgeting successful. Then we have the key limiting factors which we have to keep in mind when we are preparing the budget, because there are some factors which are termed as key factors or the limiting factors. So for budgetary control to be effective, proper period operating system should be introduced. So what are the key factors affecting the successful budget control? As mentioned in the last slide, there are a few factors that are termed as key factors or limiting factors. They are also called governing factors. So while preparing the budget, it is necessary to consider key factors for successful budgetary control process. The influence of the key factors dominate the business operations in order to ensure that the functional budgets are reasonably capable of fulfillment. So here we have listed some of the key factors. It is the raw material or the supply of the raw material. Actually, it will be a limiting factor if we can put it in a way that the raw material may be in short supply. So while you are preparing the budget and you are looking for a raw material, and you should keep this scenario in mind that you may be running out of the raw material supplies. Then the skilled labor availability. It should be as a limiting factor, it should be read as non-availability of the skilled labor or workforce. Then the capacity underutilization. This is another underutilization of the plant capacity. It could be another key limiting factor. Then limited sales. So while we are preparing the budget or we are defining a budgetary control process, we have to keep this factor in mind as well, that the sales may be limited due to insufficient sale promotion or for any other reason. But if the sales are limited, you may not be able to receive the revenues that you have targeted. Government restrictions, then the shortage of the efficient executives or efficient management system, management policies regarding a lack of capital, and then insufficient research into new product and development. So this is again a core thing when you are competing in a cutthroat environment, or in a very competitive market where your competitors are bringing more and more products into the market, and you are operating in the same category. You may not be able to compete for long if your own research and development process is not very much in place. So these are a few limiting factors which should be kept in mind while a policy or while a budgetary control process is being designed. So then we have a few of the advantages of putting this budgetary control process in place. Uh, the budgetary control process facilitates reduction of cost. It also guides the management in planning and formulation of policies. Uh, it it actually facilitates effective coordination of activities of various departments and functions by setting their limits and goals. The process, the budgetary control process, it also ensures maximization of profits through cost control and optimum utilization of resources. It evaluates for continuous review of performance of different budget centers. It helps to the management efficient and economic production control. So it helps for so where we are reviewing the performance continuously, the efficient and economic production control is also one of the objectives or the advantage of having a budgetary control process in place. And then last but not the least, it facilitates the corrective actions. As in one of the earlier slides, we have seen that once the root causes of the deviations between budgeted number and the actual number, they are defined, they have been identified, then the corrective actions are really taken. So the budget or the budgetary control process, this facilitate the corrective actions. Where we have some advantages of a budgetary control process, it does not go with. All right. So the limitations, they are, as I've already said, that it does have some advantages, but it's not without limits. So some of the limits are listed here. The budget is a plan based on the estimations and forecasts. Forecasting cannot be considered to be an exact science. If the budget plans are made on the basis of an inaccurate forecast, then the budget program may not be accurate and it may be ineffective. Then the uncertainty is another limitation. For the reasons of uncertainty about future and the changing circumstances which may develop later on, the budget may prove short or excess of actual requirements. Then we have the lack of cooperation and coordination. Effective implementation of budgetary control depends upon willingness, cooperation, and understanding among people which are responsible for execution. Lack of cooperation leads to inefficient performance. Then the cumbersome and time consuming, yes, this is one of the downside, that this budgeting process is very time consuming. It's lengthy process. Sometimes is the process and the collection of the requirements, this starts almost when the half year is past the line of when we are half year down the financial year, we start looking into it. So the types of budget, this actually there are three fundamental types of budget, or a budget can be divided into three types. It's on the basis of time, and on the basis of the three types are on the basis of time, function, and capacity. So we have the on basis of time, we have the three further budget types. When we categorize it on the basis of time, we have the long-term budgets, short-term budget, and the current budgets. Then on the basis of function, we have the functional budget, master budget, and last but not least, on the basis of capacity, is a fixed budget or flexible budget. So let's look at them one by one. When we classify budget on the basis of time, we have the three further subcategories termed as long-term, short-term, and current. The long-term period budgets, they are prepared for a longer period, and this period may vary between 5 to 10 years. It is usually developed by the top level management. These budgets summarizes the general plan of operation and its expected consequences. Long-term budgets are prepared for important activities like composition of its capital expenditure, new product development and research, and long-term finances. Then we have the short-term budgets. These budgets are usually prepared for a period of 1 year. Sometimes they may be prepared for even shorter periods, for a quarter or a half of a year. The scope of budgeting activity may vary considerably among different organizations. And the third subcategory is current budget. The current budgets are prepared for the current operations of the business. The planning period of the budget generally in months or maybe in weeks. Then we have the classification of the budget on the basis of function. So we have the functional budgets. Functional budget is one which relates to any of the functions of an organization. The number of function or the number of functional budgets depend upon the size and nature of business. Some of the commonly used functional flags could be sales budget, purchase budget, production budget, selling and distribution and cost, or your selling and distribution cost budgets, labor cost budgets, cash budget, and then the capital expenditure budgets. All of these budgets which I've just listed, they are listed under functional budget. So then what would be the master budget? The master budget is a summary budget. These budgets encompasses all functional activities into one harmonious unit. So then the last is classification on the basis of capacity. We have fixed budget and flexible budget. The fixed budget is designed to remain unchanged irrespective of the level of activity actually attained. For flexible budget, this is a budget which is designed to change in accordance with the various level of activity actually attained. The flexible budget is also called as variable budget or sliding scale budget. It takes both fixed, variable, and semi-fixed manufacturing costs into account. The flexible budget is the flexible budget has a few advantages, but before we go for that, it's also called variable or sliding scale budgets. It takes both fixed and manufacturing costs into account. Flexible budget is the opposite of static budget, showing the expected cost at a single level of activity. So there are a few advantages of the flexible budget. In flexible budget, all possible volumes of output or level of activities can be covered. Overhead costs are analyzed into fixed, variable, and semi-variable costs. Expenditure can be forecasted at different level of activity. The flexible budget facilitates at all times the related factors can be compared, time-related factors can be compared, which are essential for intelligent decision making. A flexible budget can be prepared with standard costing or without standard costing, depending upon what the company opts for. The flexible budget facilitates the ascertainment of costs at different levels of activity, price fixation, placing tenders, and quotations. It helps in assessing the performance of all departmental heads, as the same can be judged by the terms of the level of activity attained by the business. So the flexible budget and the fixed budget, they are actually, we can also compare them. So the flexible budget, this can be prepared through a number of ways or methods, and we can have the three methods which are pretty common, and they are employed when calculating a flexible budget. They are multi-activity method, the ratio method, and the charting method. So then moving on to the capital budgeting. So once we have seen the budgets and the budgetary controls, why should we look into the capital budgeting? Capital budgeting, this term capital budgeting, it refers to the long-term planning for proposed capital outlays or expenditure for the purpose of some of the followings: mechanization and automation replacement. So the cost of mechanization, automation, and replacement, these costs cannot be covered in the normal budgeting process. Then the acquisition of fixed assets. The cost of acquisition of the fixed assets, for example, land, building, machinery, and etc. Then involvement or investment on research and development. And last but not least is the cost of development and expansion of the existing products, as well as launching or establishing new projects. So these are some of the highlighted reasons why we have to do the capital budgeting. So the capital budgeting or the capital budget is also known as investment decision making or capital expenditure decision or planning capital expenditure. So normally such decisions where investment of money and expected benefits arise, they are very important in long-term organizational perspective. So as far as the importance of the capital budgeting is concerned, its long-term implication for the firm, as it is done for the longer period of time. Capital budgeting decisions involve long-term implication for the firm, and it influences its risk complexion. Capital budgeting involves commitment of large amount of funds. It requires to make an assessment of the uncertain future events, at least a better estimate of the known unknowns. Capital decisions are required to assess or to make an assessment of the future events which are uncertain. Then what if the wrong sale forecast, and it may lead to over or under investment of the resources. It ensures the selection of the right source of finance at the right time. So investment decisions taken by individual concern is of national importance sometimes because it determines employment, economic activities, and economic growth. So in most cases, capital budgeting decisions are irreversible. This is because it is very difficult to find a market for the capital goods. The only alternative available is to scrap the asset and incur heavy losses. Capital budgeting ensures, this is why it is very important to ensure the selection of right source of finance at the right time, and this highlights the importance of capital budgeting. Now, what could be the possible objectives of capital budgeting? Some of the objectives of the capital budgeting have been listed here. It is to ensure the selection of the possible profitable capital projects. It is to ensure the effective control of capital expenditure in order to achieve by forecasting the long-term financial requirements. And one of the objective would be to make an estimation of the capital expenditure during the budget period. So to make an estimation of the capital expenditure during budget period, and also to see the benefits and cost that may be measured in terms of cash flow. And it also helps to determine the required quantum that takes place as per authorization and sanction. So it is one of the objectives is to facilitate the coordination of interdepartmental project funds among the competing capital projects. So if there are a number of projects which are competing for a certain funding, the objectives, one of the objectives is to shortlist by using the principles of capital budgeting. We have to shortlist which project should be funded. Then we have another objective, which is to ensure the maximization of profit by allocating the available investables. So we have multiple projects competing for a funding. Once we have made the selection, then we have to maximize the profit by allocating the available investables. So the principles which should be used to achieve the objectives as described on the previous slides. Well, a careful estimate of the amount to be invested. This is very important. Then creative search for profitable opportunities. Then careful estimation of the revenues to be earned and the cost to be incurred in future in respect of the projects under consideration. A listing and consideration of non-monetary factors influencing decisions. Evaluation of various proposals in order to prioritize them with reference to the available investment. Then we have evaluation of various proposals in the evaluation of the actual results that are achieved against those that were budgeted, and then care should be taken to think all the implications of long-range capital investment and capital requirements. It should also recognize the fact that the bigger the benefits are preferable to smaller ones, and the earlier benefits are preferable to the later ones. Then we have the capital budgeting process. We are heading towards the end of this session. Identification of profitable investment proposals. This is how a capital budgeting process shall be proceeding. Identification of the profitable investment proposals, and then the screening and selection of the right proposals. Whatever the proposals are identified at the first stage, they are screened and selected in the second stage. Then the selected proposals or the screened ones, they are evaluated. Evaluation of the measures of investment Then we have the establishing the priorities, and then final approval and preparation of the capital expenditure budget. And then is the implementing proposal, means the project execution. Last but not the least is the review of performance. So this is how this capital budgeting process outlay is performed. This is all about for today's session. Remember, this was just fundamentals or the basics of budgeting, budgeting control, and the capital budgeting. Thank you very much for your listening. Hope to see you again soon. Thank you.